And forgot the mic. And forgot the mic. Here we go. Oh, at least we only lost a minute. At least we only lost a minute. And it was a watch party, right? So, oh boy. Yep. I forgot to add myself on and I forgot to do the microphone. Classic Jesse. Classic Jesse. I think the longest was like, correct me if I'm wrong, but if you've been watching for any length of time, uh, 15, 20 minutes where I went with no microphone on. So this is only 1 minute. Not bad. Not bad. So try to get this restarted here. Oh boy. Yeah. So we did start right at 8 a.m. Pacific Standard Time. Not normal, but since we had the watch party on since 7:15, 7:10 a.m. ish of this Bitcoin Wyckoff distribution chart that was posted back on October 8th. So what I was talking about that you didn't hear me say was that um, we posted on October 8th and we were watching it and it would take, we'd probably watch it for like maybe 45 to 60 days. And we were talking about all in here when price was at like 105,000, took about 30 days. We were saying, hey, it might play out in 45 to 60 days, complete the distribution. And then when price came all the way down to 80,400 ish, it was at about 45 days. So we kept talking about it. Is it complete? Is it only 92% complete? Will it hit the full 100% retracement target? Would it last? Would it take the full 60 days? And there's a possibility that it would go even longer than that. But here we are, day 68, and we're still watching it unfold, right? Bitcoin is back below the two dotted trend lines that I had drawn out. Said you don't want candle closes below the first one, otherwise you're going to see lower prices. Then you don't want to see a candle close below the second one, and that will signal that we're going to revisit, below 85,000 and possibly complete the Wyckoff distribution below 80,000, somewhere in that 74 to $78,000 range. And here we are right now. Bitcoin is currently below $87,000. So we've been covering it every single day as it's been playing out in real time. This is not the hindsight crew. This is the foresight crew. So mapped it all out in advance, and here we are still watching it today. I posted earlier some of these experts out there, perma bulls, some were really late to the party. Some are just starting to flip now after more than 2 months of the correction beginning, after a 36% drop so far. And they're just now starting to talk about, is the Bitcoin top in? That's how late they are. We posted this chart on October 8th when it was $123,700 Bitcoin that the top could be in. And as price started to move closer and closer to target 1, target 2, target 3, hitting target 4, going below target 4, et cetera, the probabilities continued to increase that we would be right in hindsight, but we put out the charts ahead of time, right? So that's where we're at. This is the Bitcoin Wyckoff distribution chart that was posted. And if we look at the other chart, also had some dotted lines that you wouldn't want to candle close below on December 12th. There was, and then battled the trending dots. And then you had a candle close on yesterday, on Sunday, below the second trending dots. Price push all the way back up, back test the trending dots one more time, and now it's pushed well below it. So those are the two main charts that we were watching on the shorter time frames. Of course, we've been thinking that it's always a bounce until proven otherwise. Why? Because every single live stream that we've covered for the past 2 months, every single chart that we've posted over the last 2 months, the higher time frames have flipped bearish. And so it'll take time for the ship to get turned around. And with the higher time frames, the weekly chart, the 2-week chart, the 3-week chart, and the monthly chart have all flipped bearish. We had it planned and mapped out ahead of time because there were signs that the higher time frames were going to flip bearish with bearish divergence, et cetera, et cetera, et cetera. So we've been calling it out in real time this whole past couple months, right? And here we are. Here we are. Now, let's get to the potential, right? The potentials. So we're going to get into all of that. First, let's talk about that. If you're new to the live stream, awesome. Welcome. If you're returning, even better. Good to see you back on here. Help me with the algorithms. Smash the like button. Throw in some comments. Comment an asset you would like me to chart for you on the second half of the live stream. First half, we'll cover Bitcoin, altcoins, stocks, and anything else that jumps out on the watch list. Second half, we will cover your chart requests, answer questions, stuff like that. So make sure to put in the ticker symbol. Let me know if it's crypto or stock, because sometimes they overlap with the same ticker symbol. And so for search purposes, let's keep the live streaming. So, but before we get into that, we're going to cover the weekly chart on Bitcoin, 2-week chart, 3-week chart, monthly chart, just to show you what I'm talking about. We'll do some full speculation on Bitcoin like we have been doing for the past couple of weeks, past couple of months, full on speculating. So we'll do that too. We'll draw some squiggly lines and whatnot. But before all of that, don't forget to come over here and follow us on Twitter as well, or go over here to Market Sniper Pro, follow us over there as well, and then check out the website too. So go over here. You can get the website from both X accounts, and you can see the home, the features, the 3 plans that we've laid out. So if you're not ready for the fully automated trading bots and the 70 plus hours of recorded coaching and the dashboard and the legacy sharpshooter candles and the liquidity Discord cancel. I mean, there's so much for $49 a month. It's not going to last for long. Consider this your Black Friday month. After that, price is going to go up. Alex is like, this is way too cheap. We gotta go higher. So, probably do that. Then we added the $29 a month, includes everything except the 2 trading bots and the 70 hours recorded coaching. So, liquidity access, dashboard, legacy indicators, Discord community, cancel anytime, etc. Sniper Core, $9. You just get the liquidity access. You can, once you create the account, you can see this is the liquidity access. You got futures, options, ETF, indicators. You can come down over here, and we've been following this, and it was at extreme fear last week at 23 on the fear and greed index, and then it went to 25, then it went to 28, and it was only fear, and now we're down to 17. Right now we're down to 17. So 23, 25, 28, now back to 17. Blah, 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 blah. Right. So anyways, that just we got to plug marketsniper.pro, because we've never taken $1 of affiliate money, because we never know what the next Celsius is, or the next Celsius. It was a lending platform, right? 2022 that went down, bankruptcy, FTX exchange stealing people's money, bankruptcy, and several other bankruptcies out there. So we don't promote any other platforms that may or may not be good for the people, right? So we just promote our own stuff. So that's what we do. Never taken one, even though I've been offered $50, 50% of all trading fees on several different exchanges. We still haven't taken $1 of affiliate money. So here we are, plugging our own stuff. You could get this data and the Discord access for $9 a month. It's also included in the $29, and of course, it's included into the $49 as well. and you would just have to create an account, and it's based off of your. It's all tied together with your subscription, so you can upgrade, downgrade, cancel anytime. If you have any issues, you can always email support@marketsniper.pro or jesse@marketsniper.pro. You probably get a faster response on support, to be honest, but we have backups. Support jesse@marketsniper.pro. And then, of course, you can always direct message me or Alex as well. So with all of that, should we get back to it? Boom. So, like I said, posted this back on October 8th. We're still watching it. It's breaking down in real time. And it completed about 92 to 95% of the move when it came down to 80,400 ish. Going below 78 to 74,000, maybe with the wick. 76,000 ish would complete the Wyckoff distribution pattern 100%, in my opinion. So we'll see if it does that or not. It's trending that way right now, and the probabilities are increasing as we speak. $86,800 Bitcoin. Woo! 86,800 Bitcoin, depending on which exchange you're looking at, right? HODL, just there's a lot of gaps below. We've talked about this, covered it. HODL, Bitcoin ETF. You saw the head and shoulders pattern. There's a head and shoulders pattern on Bitcoin, lower time frames as well. This pattern played out perfectly, hit $26, and then went lower, put in a possible lower high, starting to roll over. And there are older gaps. And we talked about this way back here, way back at the end of October, that you take out this pivot point, which may or may not happen today, which may or may not happen tomorrow, which may or may not happen, over the next month or two, if there's a relief rally. But if price were to come all the way down here, Wyckoff would have completed at, $74, $75, $76,000. If price is coming all the way down here to fill this gap on the Bitcoin HODL ETF at $20, Bitcoin would be at about $67,000 to $70,000, and it would be right in the middle of longer term target 3. So it's possible it goes that low. It's possible it hits there first before we see a relief rally. But my initial thoughts are that we still say we complete the full speculation, right? Say we complete the Bitcoin Wyckoff distribution pattern over here and price is at $74,000. Then maybe we get a Santa rally. Maybe we get a relief rally. Maybe we see Bitcoin bounce over 45 to 60 days, whatever you want to call it. Dead cat bounce, relief rally, blah, blah, blah. I've been saying 45 to 60 day relief rally. I've been saying 30 to 40% bounce, et cetera, et cetera. So it would be a classic bear market move if Bitcoin comes down 40% and then goes into relief rally. That's a classic Wall Street cheat sheet bear market, not just Bitcoin, right? That would bring it down to 40% at 75,000, right in the sweet spot, right in the zone. Could it go lower? Sure. For example, MicroStrategy came down pretty low over like close to the 200-week moving average, then bounced first before hitting it. It's always possible that it goes lower, right? For the bear flag crew, if you're looking at a bear flag, right, and this is the pole, and just say it's a pretty wide flag, but that's a pretty wide flag, but you could probably consider that a bear flag. But I know there's a lot of people talking about it now. I mean, It doesn't really line up with points or anything, probably a different pattern type, but the idea is the same. That's probably more like it. So, I mean, you could still call that a bear flag slash bearish pennant, right? Yeah, slash wedge. But the most important thing is that, if price is breaking below the upward trend line, right? So, uh, but that's possible. That's possible. Well, if you draw it like that, if you're taking the candles, right? So you go like that. Yeah, that's more like it, right? So yeah, it's possible that first bigger gap on HODL ETF is filled. It's possible Bitcoin drops to this level. It's possible we hit longer term target 3 before we see a relief rally. I'm thinking that we're still in that, below 80,000. Take out this wick over here. Maybe that 78,000, 76,000, 74,000. Complete Wyckoff distribution. Maybe a wick down here. Maybe a wick to 74, 75. Maybe a wick down to the third longer term target, which I'll show you. Maybe a wick all the way down here. Uh, but probably not candle closes. Like the candle closes probably around 76,000. So if it, you know, in the coming days or whatever, if it closes here at say 76,000, but wicks down here, that wouldn't surprise me whatsoever. And then, you know, the bottom is in crew, jumps back in with the wick, and then uh it's the best time to buy Bitcoin since 1775, 1776. uh right, Jesse, what are you talking about? I don't know. I'm just taking jabs over here, just jabbing people. What else? So that's kind of how I see it play out. Uh, so there's multiple reasons why. It's not just one bear flag. It's not just one Wyckoff distribution. It's not just. It's also the higher time frames has longer term target 3. Blah blah blah. Right. So that's a lot. It's a lot of reasons why. So going back to over here, you got the 76,000. You got the HODL ETFs that are uh, that have CME gap, or it's got the gaps on the stock market for the ETFs over here at like 68, 69,000 ish, whatever it is on HODL, right? Eyeball test. Smaller ones down here. So we'll see if that happens or not. This does look more like a flag or a pennant on the line chart. The line closes. So we'll see. Does it happen today or tomorrow? Probably not, right? Probably not. But a close below this dotted line would increase probabilities. A close below this pivot point over here at 86,250 ish would increase probabilities. And then, of course, close below 84,800 ish. I can't close below that. And the likelihood that we're going to go down and complete this increase tremendously, in my opinion. So, does it mean it will? There's never a guarantee. There's never a guarantee. So, and I don't have a magic crystal ball. I know people want exact price targets by an exact time frame. And if you're trying to play exact this, exact that versus probabilities, stacking probabilities, having target areas, having multiple reasons why for that target area, having multiple reasons why we could see a trend change, multiple reasons why we could see price come to a certain area. That's the way to win on more often than not. Not trying to catch the top or the bottom wick, but trying to capture, you know, 80% of the move. 5 to 6% at the top, 5 to 6% at the bottom. That gives you that 80 to 90% of the move. Try to capture most of that. So just do the best that you can and onward. So there we go. That's the daily chart. Hodl. So this gap is this was a new gap from December 1st, and that gap just got filled. Breaking news. So that gap was just filled as well. These are older gaps, like I said. They're not huge, but they're not small. Let's see. 4%. It's not a tiny, it's not miniature. Uh, especially when the asset class is it's not even $2 trillion anymore. 1 point, I don't know. I'd have to look at the market. Oh, we'll look at the market cap. Bitcoin futures, target 1, target 2, target 3. Is this another lower high? Downtrend until proven otherwise, right? You got the high, you got the lower high. It's hard to see that. That's why I probably didn't switch it to red. Oops. Now what am I doing? Oh boy. Let's go back to yellow. There you go. It's hard to see. So target 1, target 2, target 3, target 4, rolling over, right? So those are the shorter term targets talked about. Permeables would not want to see candle closes below target 4. Candle closes below, back up into it, back in target 4, and now this would be another target. Candle close below target 4. We'll get this figured out today. Oh, let's see what else. This is the weekly chart, so let's flip over to the weekly. This is on log. Let's switch to log. And we talked about this all last week. We talked about it the week before. We talked about it the end of November, and we did talk about it all the way back in the middle of November that we don't expect this fractal from 2021, 2022 to play out exactly, but it's good for an idea. These are this red trend line is representing, or this red squiggly line is representing the weekly trending dots trajectory, and this is the weekly downward trend line projecting to have a relief rally, right? So, but this entire time, the past couple of weeks, we talked about it's possible we see Bitcoin come down to complete the Wyckoff distribution, sometime in mid-December. Could have been last week, could be this week, could be next week. See it complete. Seems like it wants to complete this week and then find the bottom just above. Maybe it wicks into longer term target 3, but probably most likely that they front run my longer term target 3 at 74,000. Comes into relief rally for a month or two, 45 to 60 days, retest the trending dots, create this second point on the downward weekly trend line, put in a lower high, a macro lower high, and then we see the middle of target 3 get hit somewhere in March, and then possibly sometime in quarter 2, call it April, call it May, and maybe end of April, maybe mid-April. So sometime in April or May, we come back and retest the 200-week moving average. So that's the 200-week moving average trajectory right there. It's currently at above 56,000. It could be at, somewhere around $59,000-$60,000 by the time that happens. And then, of course, will price retest target 4 like it did in the last bear market? Would price not spend a lot of time, but maybe wick down to target 5 again like it did in the last bear market? It's possible. It's possible. A more extreme bearish case is what we've been talking about. And this is why we wait to buy the right dip. This is why we wait to see, are we going to find bullish divergence again, just like 2022 heading into 2023? Would we see, price breaking out to the upside, then a higher low and breaking out to the upside, similar to 2023, waiting to buy the right dip, right? So the reason why we don't just put automatic buy levels here or automatic buy levels here or automatic buy levels here or automatic buy levels here, like many of the expert influencers out there will do, is because it could always go lower. So I'm waiting for a higher probability of a reversal. Just like there was a higher probability of a reversal that this is a topping pattern with bearish divergence, there could be bullish divergence again at the bottom. We hope for it. We love that the market bosses continue to give us bearish and bullish divergence at the tops and the bottoms of Bitcoin. We love it. We welcome it. We need it. No, we don't need it, but we love it. We want it, and we want more of it. I think that's a country song. We like it. We love it. We want some more of it. And then we're talking about divergence. So I think, pretty sure that's a country song. Who sings it? I have no idea. I don't know. I've heard it before though. If you're a country fan, I'm not a super country. I've in my older years, I've appreciated the older country that my mom and stepfather listened to growing up. My dad and stepmom never liked country. They hated it. So, but now in my older years, I kind of like the older country. It's here and there. But this chart was originally built off of the Heikin Ashi. You got the weekly sell signal back here. Then there's buy signal, but we talked about it. Even on the buy signal, it's below the trading dots, and that it was rolling over on higher time frames, so we didn't trust it, right? And then there's another sell signal and close below that longer term upward trend line going back to September 2023, right? A close below. Multiple weekly candles below the trending dots is bearish, and then the trending dots started to flip bearish as well. So here we are. Here we are. It happened in slow motion. This is not a black swan event. Don't let the hindsight crew call a black swan event. Don't let them say nobody saw this coming. This unfolded over a long period of time. This is a local top. Could have been the top, in my opinion, because of longer term bearish divergence, shorter term bearish divergence. And the top is in hindsight. The top always starts with a local top. And in hindsight, this was a local top, dropped 32% wick to wick. Let's see if it shows it on the Heikin Ashi. Should. 32% local top, wick to wick. Called it out in real time, all the way down, had the targets hit, all 4 targets and a little bit more. And then there was bullish divergence. And then on April 11th, I was posting bullish divergence, posting bullish divergence. And then on April 11th, there was a breakout to the upside. There was bullish divergence followed by a breakout to the upside, followed by a buy signal. Put 4 targets to the upside. We didn't know if it was going to be a lower high or not. We don't have a magic crystal ball. But I did say if price breaks through target 4 and flips that resistance into support, then we could see all-time highs at that point. But until then, it could be a lower high. And so we're just taking it as it is. There was bearish divergence, et cetera, et cetera. But turned out price did go make a new all-time high against the dollar. It did not on some of the other currencies out there that I had pointed out. And if the dollar hadn't crashed at the same time, Bitcoin may have not made a new all-time high against the dollar, but it did. And then there was additional bearish divergence. This is starting to look like a lower high over here. And in hindsight, that was correct. And in hindsight, we were talking about this is probably the top then. This is probably the top, especially if you see a 36% correction versus a 32%. This is the first 36% correction of the bull run. All the rest, the other three bigger corrections were 31 to 32%. And it's very common on the Wall Street cheat sheet on a bear market that it drops 40%, followed by a return to normal, followed by a relief rally, trap the remaining bulls again. Even if this shows back up to 90,000 on the closes, back up in the trending dots, maybe 93, 94,000, it could always wick higher. It could wick higher. And then, but the overall idea is there that it would put in a macro lower high, another one, and then price would continue down, and nobody saw this coming, right? All the way down. Literally nobody saw it. I'm seeing a lot of this quote unquote expert Elliott waivers that sell courses, that sell XYZ, that missed it in 2021, 2022 are missing it again. A couple of them, not the Elliott waivers, but a couple of them have gotten better than the last cycle. But for the Elliott waivers, on at least on my feed, maybe there are some that have called it, but there's a lot of Elliott waivers that are calling the next leg up on the macro. So another reason why I don't care, like I'll do Elliott wave basics and Wyckoff basics for like as an idea for fractals and stuff too, like as an idea to like add another reason why in my arsenal of what I'm already looking at, but not to Elliott wave or Wyckoff on its own. It's not reliable enough, in my opinion. It's my own personal opinion. I don't have any like back testing data on it myself. I don't care to. But obsessively staring at charts over and over and over and hours and countless over the years. I don't care to become an Elliott wave expert. I don't care to become a Wyckoff expert, but I do think they have their place for using them as ideas that fit what I'm already seeing already, right? So, but if you just like on my feed, I'm seeing these expert Wyckoffers, not Wyckoffers, Elliott waivers calling the next leg up, who sell courses, who sell this, who sell that. And recently I replied on some of their posts. I'm like, I'm seeing something completely different. Sorry, Charlie. And we'll see who's continues to be right. 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 So there we go. This is continuing to play out in real time. It's possible this week, maybe next week. The timing, we can't foresee the timing, but this week is already lower on Heikin Ashi than previous closes, which also signals further downside, not upside, right? So further downside. If we get into that area over here, I would be expecting at some point a relief rally, but it's always much lower than what the trapped bulls would want, right? It's always lower than what the trapped bulls Like right now, they're hoping for a relief rally back up to 100,000 or 110, right? I talked about it way back here. This is probably your last days, the last days that you're going to be able to sell your Bitcoin at $110,000. In hindsight, I was right. So the fact that those bulls are still trapped, unfortunately, uh, didn't believe in my charts, unfortunately, didn't have the same tools that I have built for everybody, unfortunately. Uh, if you've been following my work for four plus years and you're still fading my charts, that's on you. I don't have any sympathy. If you're new to the game, if you're new to X, formerly known as Twitter, if you're new, blah blah blah, and you got trapped and this is your first cycle, then that sucks. But if it's your second one watching me, then I have no sympathy for you. Here we are, Bitcoin's 86,400. Uh, it would be wonderful if it played out similarly like this. We'll be all over it and we'll be able to capitalize. To finish my thought though, if we're going to go as a possible extra bearish scenario and Fed printing may not allow that to happen, but if there was a .com like crash, if there was a 2008 like crash, I would expect Bitcoin to go much lower than target 5, right? So I don't have any targets that low. It would be a case by case basis. We want to see what the Nasdaq is doing. We want to see what the SP 500 is doing. We want to see what the higher time frames are doing. It's going to take some time for the ship to get turned around, and there could be, this could play out to like if it was a like a .com or SP 500 or 2008 like crash, you know, it could always drop below the 200, bounce back up in the 200 instead of being the next bull run. You know, it could come down much lower if the Nasdaq and the stock market and the SP 500 are all correcting as well. That would be a possibility, right? So it's been lesser to the upside and lesser to the downside. And I'm going to stay with that theory until proven otherwise. But what would make me change my thought process is a bigger overall market correction. I would say then we probably have to put on additional targets, additional patience, and another reason why I don't DCA. I'm not going to DCA. Like if you're expecting to DCA below the 200-week moving average, and then it goes down, to target 5, okay, that's not too bad, right? 30% all the way down. But what if it just keeps going, right? There's never a guarantee. In the .com bubble, Amazon dropped 92%. It survived. It went on to be one of the biggest companies uh, in the world. Um, in the world, right? Market cap. Yeah, Amazon's got to be up there. Top biggest companies out there. Um, dropped 92% in the .com bubble, right? I consider Bitcoin as a tech stock, more a tech stock than a store of value, right? If you zoom out 80 years that Bitcoin's been around, 15 years, 16 years that it's been around, yeah, you could zoom out and say it's store of value, but it also started as spot only. And then it became more like in 2017, futures was introduced and probably something else before that. But CME futures here in America was uh, December 17th. No, is it? I think it's December 2017. Maybe sometime in mid-December that maybe the 20th, whatever. But um, paper Bitcoin was created. And it's become more and more paper Bitcoin, just like paper gold. There's gold and then there's paper gold, which are derivatives of gold. Paper Bitcoin, which there are derivatives of Bitcoin. So, yes, if it was spot only and if it was only 21 million Bitcoin ever created, yeah, I get that whole argument. But with unlimited capability of paper Bitcoin, with derivatives of derivatives of derivatives, then you know, in my opinion, it's a less store of value, uh, but it's amazing for swing trading. So even if you're like an investor swing trader, right, where you're like, okay, I'm going to buy this dip, just like we did back here. We bought the dip. There was bullish divergence. There's bearish divergence at the top. There's bullish divergence at the bottom. And if you're like, I'm going to swing trade the crap out of this next bull run, I'm all for it. I am all for it. But uh at some point there could be a bigger correction. So Bitcoin's never experienced the dot-com bubble. Bitcoin's never experienced 2008. I think the biggest NASDAQ and SP 500 corrections were like 30 to 40%, and Bitcoin still dropped 70 to 80 something percent, right? So I personally consider it a tech stock. Obviously, none of this is financial advice. Obviously, this is for entertainment purposes only, and hopefully have a little bit of fun along the way. Like making fun of me for not having the mic on for the first minute. But it was a watch party, so we got away with it. So that's the weekly chart. We continue to watch it. The Elliott waivers calling for new all-time highs. I don't need to tell you that it doesn't matter. I don't need to tell you that. So if Bitcoin plays out similar like this, I will be a buyer again. If there's a .com like crash, there's not going to be too many buyers on a bigger move down. And with the right setup, I will be a bigger buyer down there. So buyer here, buyer there. If it's down here and there is the right setup as well, like if that setup was way down here. Oh, what's happening? I just want to move it, right? And it was going to play out like that. I would be a bigger buyer. Because even if it did something like that, and even if it just say it was dead, quantum computers killed it, right? Who knows? Whatever the narrative is going to be, it would still be a nice bounce. But then if it did go on to make new all-time highs, right? Again, then it would make me want to be a bigger buyer. But if not, if it continues to be lesser to the upside and lesser to the downside, like retracement's 36%, 100%, it gets up to 180 and the next run, it's 300%. I won't go as heavily, most likely, because there's other opportunities out there. So I'll be diversified, and I will look for those opportunities because there's, whatever the narratives are, whether it's AI, which was a great narrative, quantum computers have been, could be, will be the next narratives again, or energy, or wherever money rotates, right? Wherever the big players rotate is what I'd rather take bigger swings, where maybe there's a 500 to 1,000% move versus smaller and smaller moves over time, right? We'll see. We'll see. I don't have a magic crystal ball, so we're going to find out how it plays out, how it unfolds. This is my thought for now. and we will adjust in real time and play it to the best of our ability, right? So, woo it's a lot of speculation. It's a lot of speculation. Let's go to the daily. Let's get back on the candles. Let's get back of log for the daily chart. This is a fake out to the upside. There was pending buy, pending buy, pending buy, pending buy, drop back down into the channel, right? Downward trend until proven otherwise. In real time, we're like, hey, we're ready to say Wyckoff distribution is canceled. We are ready to say that. We weren't ready to retire it quite yet, but we were ready to, we were prepared to, but not ready to yet. Like I wanted to see a buy signal and take out this pivot point over here. Taking out this pivot point at 1.87 trillion, aka wherever it was at, I think it was like 93 or $94,000. Then I would have called it on the Wyckoff, not playing out fully, right? So this pivot point, if we would have closed above there, I talked about it in real time. If we would have closed above, I would have retired the Wyckoff. Did not close above. Did not close above. Not ready to retire. Not ready to retire. And here we are. Now it's closing back down. So not getting emotional. Just having it as okay, my line in the sand for the Wyckoff is here. Close above there. Now it's getting back below this pivot point. And then if it starts getting back below this pivot point, then like we already mentioned, then the probabilities are continuing to increase that we're going to see Wyckoff play out, and that channel is probably right around that $74,000, right? Under 1.5 trillion. So, whew. This is the speculation we played out. We had multiple ideas. The overall idea was that even from back over here, that maybe we see a bounce into the trailing dots, and then maybe we see price come all the way back down, put in bullish divergence, however high or however low it is, which means a close below 84,700, while RSI is higher, would put in bullish divergence. That would complete the Wyckoff, maybe a breakout somewhere over here like that. If so, maybe I would play the relief rally to the upside, 30 to 40%. Maybe even goes higher. Oh, I don't think so. I don't think so. Maybe. I mean, that would be crazy if it did go that high. But that takes you up to like that psychological level of 100,000. We're back above 100,000. We're back above. We're back above. We're back above. Yes, yes, we're back on the relief rally. Everything is returning back to normal. We're so back. Let's go. Let's go. Rocket ships. Elliott wave. I told you. I told you. Elliott wave. I told you. We're back on. That was the bottom. Just as they said over here. Just as they said over here. Just as they said over here. And just as they said over here, right? They will literally call the bottom on every single wick all the way down. And then at some point, they will get the relief rally, but it's not as high as they hoped for. They probably, some will get out. Just like we had some market snipers in the Discord tell me that they didn't listen to my charts up here, came all the way down here. I was all over it in the Discord. I'm not as active in the Discord as I was in 2022, just to be honest. You can still direct message me or tag me or whatever, but I'm not as active because I'm continuing to build out the trading bots, the strategies, other tools. Alex is helping me a tremendous amount. And I think my value is bigger creating that for people, just like 2022 of starting to build out these indicators um, to help people visually. So there's 77 recorded coaching videos, like 70 plus hours of recorded coaching videos. So you can learn a lot, in my opinion, all from 2022. I'm still using the similar strategies, same strategy, a little bit of wrinkles here or there, but basically overall, they're all still valid, in my opinion. And so we'll see what happens if we see bullish divergence on the daily chart. This would just be a relief rally. And then with a lower high, whether it's Bitcoin, Ethereum, or XRP or whatever. My short is currently on XRP because it's bigger percentage to the downside. Takes out this pivot point area over here. Could be a quick shot down. Would be awesome, right? So even from here, that's another 40%, right? So I have obviously I don't go all in, but instead of shorting Bitcoin, you know, and then heading into a relief rally, like everyone wants to start shorting it now, right? Everyone wants to start shorting Bitcoin now. This is when I would start getting less and less confident to short Bitcoin until we had a relief rally, right? So if you're not already in a short, down here is where I'm less likely to short. Could you still make money? Sure. But then I maybe play the relief rally and then attack on the next macro lower high, right? Whether it's Bitcoin, whether it's Ethereum or XRP, blah, 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 right? So 2022, I did not attack Bitcoin to the downside like I did in 2021. I attacked Ethereum to the downside, and that proved to be a better decision based off of a higher percentage drop. And so we'll see how it plays out. It's possible I do, but um, if Bitcoin's lesser to the upside and lesser to the downside, and Ethereum is slightly more percentage to the downside, and they're looking similar, then I was doing side by side comparison charts with Bitcoin and Ethereum. They looked similar, and the targets had a bigger percentage to the downside on Ethereum, so I chose Ethereum. So I had my reasons why. Not because I'm a Bitcoin maxi, right? I'm a swing trading maxi. So here we are. Obsessed with charts, obsessed with swing trading, and that is where we're at. Drew this out. However, the price action plays out, you can see my squiggly lines, my top-notch squiggly line TA. And then we'll be looking for a 45, 30, 45. May take longer, right? Maybe it takes longer. 45 to 60-day rally, relief rally, right? Up, down, up, down. Probably wouldn't be this easy. 45 brings you into February, 60 days, right? So probably have to redraw this somehow. But that was just kind of giving the overall idea. But it's probably going to be much more difficult, right? Up, down, up, down, up, down. Probably be much more difficult with a similar idea. So it's 45 to 60 days. It's probably something like that. And somewhere in between all of that, right? Uh, let's see. Break out, come back down, pump up. I mean, that seems more difficult. So, break down, and then the adjust. Something like that. some similar idea like that, right? And then your bigger line in the sand, right? Your more aggressive downward trend line, your more aggressive upward trend line, your less aggressive upward trend line. This is the final line in the sand. And you know, so a lower high, higher probability, higher, and then the milestones continue to increase. So whoo, whoo, Robbie. Okay. Are you long, short? What are you? Yep, just covered it all. Shane, what up? What up? What up? What up? Yep, I agree. I'm assuming you're talking about Elliott Wave and Wyckoff. Good for confluence. That's what I was trying to say. Yep, you're exactly right. That's what I was trying to say verbally. The confluence, they align, right? All that stuff. Junaid, is that right? Reposted the stream. Thank you. Appreciate that. That's awesome. Girther King, hey Jesse, when do you probably see a relief rally before the real Armageddon? Well, that's where I see it, right? And this is where I've been saying that we'd see it. Maybe mid to third week of December, every single live stream, Girther King, if you remember, we've been talking about it, that it could be December 9th, could be December 15th, could be December 23rd. That is starting to bottom out, begin the relief rally, begin the Santa rally, begin the dead cat bounce, the bounce, whatever you want to call it, the return to normal of the Wall Street cheat sheet, complacency of the Wall Street cheat sheet. If you're not sure what any of that is, you can just Google images on Wall Street cheat sheet, and you can see the breakdown of euphoria, complacency, and then denial, capitulation. All that comes later. So if price is coming all the way down here and we see bullish divergence, could see that bounce, that relief rally. That is very difficult to play out. Get rejected, down, up, down, up, down, up, down, up, down. Blah, 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 blah. Taught the baby how to do that, by the way. Blah, 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 blah. Now she does it all the time. She's like 17 months old. She's like, blah, 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 blah. And then I taught her some other weird sounds, but fun sounds. So there you go. She started spitting though, because wife is brushing her teeth and teaching her. She copied the wife on brushing her teeth and spit the toothpaste out, and so now she's spitting pretends to spit toothpaste out, and now it's overlapping into food and all that stuff. So yeah, that's what I'm looking at. Showed it on the weekly chart with the fractal. The fractal and the relief rally shows to like end of January, February, right? So all of that. People are going to get really bearish over here, and a lot of the talking heads will start flipping more and more bearish, and a lot more people will talk about shorting, showing their gains, their unrealized gains, just like over here, and then the market reverses, right? The overall higher time frames are bearish. So I'm only expecting a bounce. I'm only expecting a relief rally, but we're going to find out how low it goes first. The bullish divergence could be down here like this. And we'd have to move that over here, right? So the bullish divergence maybe somewhere down in here. Maybe it doesn't go that low, but that's if like Wyckoff completes, the bullish divergence would be down here. If it doesn't complete and it completes like 96 or 97% of Wyckoff and leaves the Wyckoffers in shambles, right? We're not tied to the Wyckoff distribution. I would, if it was closing back above here at 93,500, and if it was with the buy signal and all that stuff, I would have retired the Wyckoff chart. I'm not all or nothing on Wyckoff, right? Or Elliott Wave. So, uh, but people are going to get a lot more bearish down here. People are going to get a lot more bearish down here. And if so, then maybe we'll see that bullish divergence. Would be great. Maybe we'll see, maybe it takes longer. Maybe it's just a lower low on RSI2 and then comes up and then puts in bullish divergence. I mean, that's one I haven't even talked about, where puts in a lower low on both RSI and price, then puts in bullish divergence, then relief rally. So that would be something to see. So if that wasn't the bullish divergence, but the bullish divergence was down here, right? So that's possible. But we're going to stick to what we have right now. And we'll see how it plays out, right? But currently dropping down below $87,000 today, almost $86,000 today. Should we say that quietly so the bulls don't get upset? BTC long rise process of 26. What? Okay. That just sounds like a bot, to be honest. Even the name looks like a bot. BTC long rise process in 2020. No, it's a bear market in 2026. Sorry to be the bearer of bad news, but and just to strengthen those ideas, right? We're getting closer and closer to what I'm talking about, not further and further away. So, all right, here we go. About to put in another RSI sell signal over here. Another one, right? MACD crossing over bearish on the daily chart as well. So again, price could be lower, RSI could be higher than 2023. So it could come all the way down to like 24, right? And that could put price way down here. If RSI comes all the way down to like 24, anything above 23, could be 23, exactly 23, and still be slight bullish divergence if price is closing lower. And that would still be slight bullish divergence, right? So that's what we're watching. Weekly chart is bearish, right? Weekly chart is bearish. MACD is well below the 0 line. RSI is well below the 50 line, right? You go to the 2-week chart. We've been talking about this. We've been covering it every single day. The 2-week chart closed on the 24th. Had a sell signal once it closed on the 23rd. 2-week, no, so the 7th. Another candle closed on the 7th, right? Red trending dots hasn't happened since over here, right? This sell signal was above the trending dots. This is a close below. We're off of, I cannot, okay, good. We are off log too? Yep, okay. So it's bearish. It's bearish. After the first sell signal, it went lower by 23%, then relief rally, then another sell signal, but the buy signal was underneath the red trending dots. So what if, I mean, that'd be a lot lower than I thought, right? That would be right where HODL ETF next gap down is, about that $67,000 range. Then rally in January. So after Santa Claus leaves, and Santa Claus is not very nice to us, right? So $67,000, right above the 200-week moving average. Relief rally, January to March, 30 to 40%. That makes more sense. Gets back up to 94,000. 3-week chart. Sell signal below the trailing dots. Sell signal below the trailing dots. Then a relief rally. Went lower first. Has gone lower first. Right? Relief rally. Last sell signal. 200-week moving average. Boom. Gone. Monthly chart. We got to get on something that has more chart history. There we go. Let's do the 3-week chart again with more chart history. There you go. Back to the 200-week moving average, right? It's coming back to the 200-week moving average eventually. So we're just trying to game theory it out in the interim of what happens, right? Full on speculating. But there's no doubt that I believe it's coming back to the 200-week moving average just like it did back over here. No doubt. Long-term bearish divergence. MACD is coming to the zero line on the 3-week chart. MACD is probably under the zero line on the 2-week chart. Monthly chart. Back to the trailing dots. Not seen since January 2022. So never retested the trailing dots this whole entire time. Came back to the trailing dots. Not here. Not here. Those are 31 to 32% corrections. Came all the way back over here, a 36% correction. And now we're just dropping lower. Long-term bearish divergence. RSI sell signal on the monthly chart. MACD bearish crossover. November 2025. MACD bullish crossover. March 2023. And MACD bearish crossover. January 2022. So see how wide it gets and then it bounces and closes the gap. It's pretty wide. And at some point this month or next month, so it could get wider and then close less wide and then bounce, right? And then relief rally, let the yellow line catch up for a month or two during the relief rally and then continue downward. So, whew. How much time are we? We're already at 9 o'clock. What the heck? Oh my God. We're going to continue on. We're going to look at several other assets, but I'm going to just catch my breath here. In an hour. That's right. Started the watch party 2 hours ago. Right? I went live with the charts an hour ago. Okay. Yes, sir. You got it. MicroStrategy, the canary in the coal mine. again. Magnet all the way to the 200-week moving average. As talked about way back here, when there was a bearish engulfing candle on the daily chart, there was a question mark. Was the top in? No longer a question mark. The top was in hindsight. We didn't know for sure in real time, but we did talk about it. Ultra bearish on the weekly chart. Ultra bearish on the weekly chart. Well below the zero line on the 2-week chart. Below the zero line on the 3-week chart. Getting close to below the zero line. Once it went below, it stayed below for a year. Bearish divergence, lower high on the monthly chart. The canary in the coal mine. $86,000 Bitcoin. You are welcome. Thank you for all of your support. Help me with the algorithms, liking, commenting, reposting, sharing, wherever you're at. Thank you. Let's look at some more charts. We'll come back to Bitcoin. Oh boy. My guess is it's going to close below this dotted line, this dotted trend line. That's where it's going to close. Probably below this pivot point. Maybe below this pivot point over there. I have no idea where it's going to close. 0. All right, let's hit up some more charts. Let's go Ethereum. Let's look at some altcoins for sure. The bleed continues. We're going to look at the NASDAQ, the SP 500, and we'll take a look at the Magnificent 7 as well. And then we have, oh crap, I forgot about the request. By myself, I wasn't following a stupid promo called Crypto Michael, which followed you from the beginning though. Yeah. If it's the one I think you're talking about, I don't follow him, but I did see he did pop up in my feed a few times, and he's been bullish from the top down. Yeah. We were here for the last one, so this one felt like it was in slow motion. Yep. So anyways, we'll come back to Bitcoin because this is the Bitcoin Wyckoff distribution watch party. So we're definitely going to come back to it, especially as price continues to drop down. I'm not putting a timeline on it. We'll see how long I can sit in the chair and keep going. But let's look at Ethereum. Potential. This is was that it for the relief rally? Was that it for the relief rally? Oh boy. These are the weekly trending dots. So remember, I've said it once, I've said it hundreds of times. Bounce until proven otherwise, right? A bounce until proven otherwise. As of right now, for Ethereum, it's breaking down. Like however the price action plays out, it's breaking down. And then maybe we would get some bullish divergence similar to Bitcoin down here. Maybe not, right? It's never a guarantee. It's never a guarantee. Then that would kind of look like the potential. This is what I consider, even though it did bounce and we thought it would only be a bounce, it's a 30% bounce, but you wouldn't have caught a 30% bounce, in my opinion. So I didn't play it to the upside. I'm not trying to go wick to wick because I'll get chopped up. But it's possible if we see Bitcoin hit those prices we just talked about, it's possible Ethereum puts in bullish divergence around the 200-week moving average, bounces, and then maybe gets a relief rally back up in the 200-week moving average, way out here, right? So even if it did do that, 30 to 40% bounce, maybe, I don't know, but this is a really aggressive downward trend line. This was a less aggressive one, and it was a fake breakout to the upside, and now it's just dumping back down. So if you took the buy signal and the breakout, don't forget to also hit the sell signal, right? Whew. Cool. Yeah. I've seen other ones and they do it just for I've seen bigger ones, at least in my feed, and I'm convinced that they just do it for influencing clicks because there's never a downside. It's only upside. So when that happens, either they really don't know what they're doing or they really only care about clicks. And the ones that don't really know what they're doing, they flip. If they never flip, then they're doing it for clicks, in my opinion. Cool. So does that with the trading bots too? And did you get set up on because we went live in end of October and then we switched the back end again to something to we went back to so for example, I've I set it up on the payment system on Stripe back in 2022 and then we attempted Shopify and there was, you know, probably, a certain amount of people who signed up on Shopify payment system, and then we went back to Stripe. So some of them have converted back over to Stripe. Some have stayed on Shopify, and we've been able to hand accommodate them getting set up on the website portal. But now, if you sign up on Stripe through the website, you and create an account, it's all linked together. Stripe, upgrade, downgrade. It's just better than Shopify, in my opinion. For services, maybe Shopify is better for products to sell, but I've never sold any products. And so it's just easier, cleaner, more API capabilities, blah, blah, blah. So we did upgrade the website portal. We upgraded the Stripe payment system by going back to Stripe. We Alex helped me with it. So it was trial and by error. We had good intentions with Shopify, but I've had Stripe since 2022 and it's better. And so now it's all linked together. The dashboard. You can find the recorded coaching not only on Discord but also on the website. The liquidity access, all of that is on the website with more tools to come. I just paid for more. I just reinvested into more API subscriptions to give you guys access to. So if you think you're paying a lot with $9 a month or $29 a month or $49 a month, I'm paying for a lot more on API connections and data and stuff like that to consolidate all into tools that is covered underneath your subscription at those current lower prices. I'm paying way more so that you guys can pay less. So I'm paying way more. If I have any problem in life, it's the fact that I reinvest too much money. So you guys can benefit from that. So there you go. Reinvesting in so anyways, what was your question? Oh yeah, cool. So my question was did you sign up on Shopify or Stripe? And if you did sign up on Shopify, did you go back to Stripe? Oh, okay. So you did like the $29 on Stripe? Cool. Cool, 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 cool. Yeah, that's good. That's good. Slow and steady. Slow and steady, right? And I in my opinion, I made it cheap enough that you could go slow and steady. It's not 199 a month where you got to get it now and you got to have it figured out by tomorrow. Slow and steady wins the race, which is hard for me because I'm when I see it, I like to hit it. hit the go button, right? So patience is a skill that can be developed over time and golf and chess has helped me with that since I was a kid. Otherwise, I'm full speed ahead. Once I see something, I want to go full speed ahead, all in. And so chess and golf has helped with that over time. Trading also has helped me with that over time. So it's a learned skill for me. It's not a natural patience is not a natural ability for me. It's as when I see something, I go hard, I go fast. So patience has been a learning skill. Cool. Sweet, sweet, sweet. So, anyways, it's starting to break back down on Ethereum. NASDAQ, we'll come back to that. We'll circle back on the Magnificent Seven. Algorand continues to drop. No matter how hard I want it to bounce, it's not bouncing, right? It's dropping. And we knew that it was just a bounce until proven otherwise. Uh, why? Because the weekly chart is bearish. The candles are well below the trading dots. Did we hope for a bounce to the trading dots? Sure. Why not? Did we hope for a bounce to the 200-week moving average? Sure. Why not? But we're not in a position to worry about that it does or does not, right? So it just continues to be bearish. XRP breaking below a similar neck confirmation line as MicroStrategy, right? Had that big pump. The only difference is it made a new all-time high over here and had bearish divergence where this was the all-time high for MicroStrategy, but similar lines. You get that weekly close below, we're probably going to see prices come back down here. And obviously, I think we're coming back down to the 200-week moving average. So, right? First weekly sell signal was back here at 253. So that's a pretty big move down. Even after all of that, if you saw the close, right? Or you waited for this other sell signal, or you got in another sell signal, right? It's the same price, right? Both of those sell signals are at the exact same price. Interesting. 24%, 57%. So what else? Cardano. Oh my goodness. 38 cents. Remember we were talking about the downward sloping 200-week moving average. We started to change our thought process that Cardano would not go see a new all-time high in the near future. And since then, it's been down only. Bounces along the way. Nice liquidity bounces to capture more bulls to the upside. But there are plenty of perma bulls calling out Cardano making new all-time highs literally all the way down, right? Since the 200-week moving average started downward sloping 1 year ago, you've seen so many posts in Cardano perma bulls, yet price is down 50% from the start of the downward slope. And from this bounce, wick to wick, 79%, 71%, just from the bounce. So imagine you're trapped in Cardano. People are capitulating right now, even if they don't post it. They changed their YouTube talking points. That's a form of capitulation. Even if they're caught holding forever, or they sold and didn't tell anybody, right? If they're changing their YouTube channel and their X channel from Cardano's pumping to whatever their new headlines are, they capitulated. It's a form of capitulation. So currently was down 90%. At the bottom of the bear market, it was 93%, not far off the bottoms. 87.65% right now. We talked about Rose and some other ones did come back down, retest the very bottom, and even went lower. I probably even lower now. Who knows? But someone had me look at Rose, Chainlink, similar thoughts. Never hit target 4, only hit 3 out of 4 longer term targets. Never a guarantee. XLM continues to break down. Bullish divergence was cleared, in my opinion, uh, on the daily chart, and now it's coming back down for. Looks like it wants to retest the 200-week moving average, breaking below this pivot point over here, just like I pointed out on MicroStrategy and XRP. Chop suey, talking heads. Suey's gonna save you. Gold still ultra bullish on the weekly chart. Still ultra bullish on the higher time frames, letting the trending dots catch up. This is probably bearish divergence, though. Possible bearish divergence. I mean, it is bearish divergence, but doesn't mean there won't be additional bearish divergence, aka higher highs. So is that the top? Maybe. Let's look at the daily. That's a weekly chart. Daily chart could be bearish divergence, right? Could be, but it's bullish on the daily, ultra bullish on higher time frames. So right now it's kind of guessing. No sell signals or anything like that yet. Silver, ultra bullish on the daily chart, weekly chart, monthly chart, 3-week chart. Crazy. Just craziness. Dollars flat. Some call this the tweezer, double wick bottom, right? VIX is bullish on the day. TLT, I haven't looked at it in a while. Not doing much over there. Veritone's dropping. HUT. Talked about this. This is a daily chart. Put this out a long time ago. Not exact, but similar. Right? Get a little bounce over here. Let's see. Let's keep it the way I drew it out a long time ago. I mean, I drew that out a long time ago. So I think it was over here. Bum, bum, bum. Like however it plays out, like down, up, down, up. I mean, it did put in the higher highs, right? And Elliott Wave would say that's like the A B correction of that downward move, right? So I know the basics, but I don't care to be an expert. But the idea was down, up like that, and then come down and retest this line. Maybe it gets a little bit of bounce, maybe not, and then break that line there. That looks like just break that line there, the confirmation line, and then probably going to see prices come back down the 200-week moving average, right? Probably. What else? 160 below 164. I think it hit 155. TQQQQ. Tesla. Let's go to the Magnificent Seven area. Amazon. This daily chart talked about, would it come down and fill some of these gaps, right? It's looking like a lower high. Now it's breaking down. Get off these dotted lines. Trend has been broken. Expect fake outs along the way. Apple, bearish engulfing candle. In hindsight, mom locked in profits back over here. It was like a 30% move, right? Mom locked in profits, looked like a hero, reversed back around, didn't look like so much like a hero. Mom, well, it could have been 40%. Yeah, mom. That's not my mom's voice, but oh, Could have been 40%. Why did we get out so early? Never good enough, right? Never good enough. It's hilarious, though. It's hilarious. Why did we close? It went up 10%. That's more like her voice. While she's living her best life in the retirement community. My only negative about the retirement community, because we spent 7 days in a retirement community of 55 and older. They've got a lot of great events, like for the older people. Two things that are tough for me to, like, it would be tough for me to live in, right? Loved everything else, right? Golf cart community. A lot of them play golf, right? They got golf carts rolling around, gated, so it's secure. All that stuff. They got multiple pools, hot tubs, pickleball. F the pickleball court though. I hurt my ankle on that one. They have like a chipping putting green. What else? They have events all the time. Like their calendar is crazy, right? They have events all the time. Like probably 10 to 15 events per month. But here's where I can't wrap my. It's sometimes it feels a little depressing because the for sale signs, right? If you see the for sale signs, it means one thing. And yes, it's a cycle of life. And yes, people get older, but man, there was a lot of for sale signs when I went, more than I've seen in a while. So the older people are starting to, pass away. So that's one thing, right? So the for sale signs are constant reminders that the people you've made relationships with, built friendships with, continuing to pass away. So that'd be one thing that'd be tough to get around. Yeah, you still have a lot of other friendships and stuff, and you kind of all go through one thing together, I guess. So, but it's the perpetual, you build a bond through that, and then someone passes away. So, second is that there's not much, beside all the activities, there's seems to be a lot of happy hours in the retirement community. I mean, a lot of happy hours. I've never seen so many happy hours in my entire life. Every day was happy hour. I haven't seen those many events since the fraternity days, right? The fraternity days in 19, 20, 21, right? The golden fraternity days. There was an event, seems like 6 days a week. A reason to drink, right? Someone's birthday, some event, blah, blah, blah. The second most I've ever seen is this retirement community. And maybe not all retirement communities are like that, but this retirement community in particular seemed like the fraternity days was like the epic is the sorry, I've been on here a long time now, hour and 40 minutes. If the fraternity days was like the mecca of events that are not trading, are the meta of blah, 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 blah. The mecca of events for partying and all that stuff, right? This is a close second. And I'm maybe not over partying like the fraternity days, but like events and drinking wise, it's too much. It's too much. I rarely drink. Like if I have a beer at dinner once a week or whatever, but every day there is a happy hour. So I could have a 6-pack of beer in my fridge for 4 months, 5 months, 6 months, and I never drink it. So my wife doesn't drink. So my baby doesn't drink. So I'm not gonna be at home drinking with myself, right? So I rarely drink. If we go out to dinner, might have a beer, but it was crazy. So, anyways, back to mom living her best life. Good for them. That part of it, the drinking part, is not for me, right? Not for me. Microsoft, huge gap. There's a huge gap for a big market cap. It's coming back down. That's the daily chart. That's the weekly chart. You know it. You may not love it, but you know it. TQQQQQ. We were talking about it was looking like a lower high. Sell signal. Here we are. UNH. Monster drop. Big gap up there. This gap was filled. Bullish divergence. Breaking out this downward trend line. But I'm not in a trade on it, so I'm not paying too much attention. Russell 2000. We talked about, was that new all-time high, the high, had a bearish engulfing candle. Very similar setup as Bitcoin, where there was a Wyckoff, where it looks, even if this isn't Wyckoff, it looks very similar, where the run up, this is like the test, or this is that's the UT, that's like the BC, that's UT. I mean, it looks very similar to the Bitcoin, right? That's what we talked about. So if that was the BC, right? Price could take out that wick and then come back down. So I don't know. It's still above the trading dots and whatnot, but that was a bearish engulfing candle. That's bearish divergence, right? Dow Jones, similar thoughts, bearish divergence. NASDAQ, bearish divergence, followed by a possible lower high. We talked about it, covered it. Possible lower high, possible lower high, possible lower high. Sell signal. Back below the trailing dots. SP 500, same thing. Could be the high. Almost hit target one. Could be a lower high. Could be a lower high. Bearish engulfing candle. Still above the trailing dots, but similar thoughts. PLTR could be a lower high. NVIDIA. Tesla could be a lower high. Made a new all-time high. Right? So bearish divergence, double top, 3 out of 4 targets hit to the downside. Fourth target was not hit. This target is now invalid. So 3 out of 4 were hit. This one has been invalidated. Why? Because the price made a new all-time high. Could it reverse back around like the Russell 2000? Maybe. But as of right now, it only hit 3 out of 4 targets to the downside. And you can see, this is why I don't trade earnings. Negative earnings, right? Makes a high. Was that a new? Oh, it wasn't a new all-time high yet. But makes a new local high. The former new all-time high is back here at 489. So there we go. But this is the fourth target is done. Third target. So it's kind of a wait and see. To wait and see. Bullish on the daily chart. Above the trailing dots. There it is. There it is. I think that's about it for the other charts. I had someone ask about, I think it was early on, Robbie, Arca. It's the only one I see on there. Crypto, Arca. Oh. And then we're going to circle back to Bitcoin because it's the Bitcoin watch party. And what did you say, Coinbase? Arca. Well, where is it? Where is it? I don't see Coinbase. Did I miss it? Sir, I don't see Coinbase. ARCA. And that's why you got to tell me if it's crypto or stock like you did by saying Coinbase, because there are other assets. Did I just completely miss it? All right, well, KuCoin it is. But I'm not gonna spend a lot of time on it because it might be the wrong ticker symbol. Because you said Coinbase, and I'm not even seeing it in Coinbase. Yeah, this is probably not it. Legend of Arcadia. Nope. All right. Yeah, not much to report there. Bearish, ultra bearish. So not a lot of chart history on KuCoin either. So that's about it. We don't need to pay attention to that one. Take it off my sniper list. 85,000. Woo-wee. Bitcoin has just gone below $86,000, not seen since December 1st. Woo. Broke down over here from this upward trend line, closed below here on this upward trend line, and lower we go. Let's see, what else? Any other questions? I guess we'll keep this going. I'm gonna go get some more water though. I'll be back. I'll be back in a couple minutes. Let's see. I'll be back. It might take a couple minutes because of my ankle. Mic check. $85,700 Bitcoin. Woo-wee. Had to eat some M&Ms that my nanny got me. I never buy M&Ms. Thank you, Nanny. Coming back into longer term target 2. Back into the channel. Chop City. I want to say Chop Suey, but that would get confusing. Does that make English sense? $85,800. So I just put some notes on there. As you can see, the blue line, just thinking about it, just kind of breaking up a couple things, like probably going to go through a local bottoming phase with possible bullshit versions. Fingers crossed. Yellow line, possible relief rally, aka Chop City. Chop you up to death, chop up the bulls, chop up the bears, chop up everybody. And while it goes through, I mean, literally, like Chop City from here, right? Boom, 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 right? That's so much chop. So careful. Don't get chopped up, right? Don't get this is the chop zone. That's the way I kind of see it, right? If that's like the chop zone, we spend a lot of time in there. From this candle, breakout, fake out, lower high, gets back into there, right? It's like that would take a long time to go through it. So, you know, maybe if you're on lower time frames and you kind of had this plan laid out in advance, maybe you could take some buys and sells on lower time frames based off of that. But on swing trades, probably gonna get chopped out. Like maybe if there's bullish divergence and it starts breaking out, you held it, it's up, it's down, it's up, it's down, up, down, up, down, up, down, and then finally hits that 30% correction. It'd be very difficult for 99.9% of the people to hold through all that. Especially if there's like buy signals, sell signals, buy signals, sell signals. So at the end of it all, was there a better asset out there to buy a trending or sell a trending asset um, before that next bigger drop, right? Say if it comes all the way back up, because then you're looking at, okay, you know, 30, 40%, probably 30% drop before another consolidation phase. So this was a 36, could be a 40% drop. After a 30 to 40% drop, probably going to consolidate. Maybe the relief rally up 30%, and then the next big drop 30%, and would probably happen fairly quickly, right? So a lot of many traders will have a good long or short, and then they give back a lot of gains on Chop City, right? So just be aware of that. That's why someone asked me if I was going to play the relief rally. I said, I don't know if if this is the right idea with the bullish divergence and we're getting a breakout and it's looking like we're going to see because this could be like that, right? Come up, get rejected, then come back up, come all the way back down to the trend line again, up, down. I mean, maybe you get a good entry and maybe it trends the whole way. Probably not likely. If it's a lot of this, I mean, how much are you really going to make off of it, really? Right? So, I don't know. I'm not sure. If there's something else that looks better, then I'll probably just swing trade that. But if this bullish divergence plays out and it's looking like a breakout like April 2025, then I might play it. I might play it to the upside. Low leverage, spot, whatever. So if there's a canary in the coal mine with similar setups and one breaks out before the other, then I might play the one that's lagging time wise. So, yep, mic's on. Yep, just double checking. So I don't know. It's gotta look like, 'cause here's the thing. It's, I typically like to trade with the trend, right? So, if there is this relief rally and consolidation, I would be attacking the lower high. I would be attacking the breakdown of an upward trend line. I'd be attacking when it's about to be a sell signal. Lower time frames have already started flipping. Higher time frames are already bearish. That's when I would be attacking. But you only get like if you're only trading Bitcoin, you probably get 4 to 6 awesome swing trades per year. So if you're swing trading Bitcoin all year round, you're getting chopped up a lot, right? So 4 to 6, and I've been watching this since 2020. 4 to 6 30% plus moves um per year, I think, from what I remember. So, you know, assume it's chop and you'll find a trend, few times, 4 times, 5 times, 6 times in a year. Here we are, December, right? So take that for what it is. Blue line, local bottoming phase, possible bullish divergence, meaning price comes down lower first. Yellow line, possible breakout relief rally, chop city, possible, right? Maybe it just trends straight there and comes straight down. I doubt it though. Red line, next large price drop. This is the red line. Longer term target 3, if not hit now, right? So longer term target 3, which I showed on a different chart, is probably down here. It's possible we come down to those lower prices. Possible. There would be a nicer relief rally bounce of like 40%. Here, maybe like 30%. So um, it'd be great. Then I probably would, like, if it did drop that far below and put in bullish divergence, then I probably would play the relief rally. If it stays more shallow, then I might not, and I might look for something else that looks with higher upside. That's has similar things like bullish divergence, higher low. Let's go. So that's the speculation of the bottoming phase, potential bullish divergence, relief rally, next bigger drop down, aka Wyckoff completion. So maybe it completes. Yeah, we've got the holidays coming up. I hope it completes by then. We spent a lot of time with my side of the family. Now we're going to spend time with the wife's side of the family. So not as much time though. So it should be fun. I get along with her dad. I get along with her sister. Even she has a challenge with her mom. Even her sister has a challenge with her mom. So, to say that I have a challenge with her mom, I have a challenge with her mom, but I don't get as emotional over it. Like they get like her and her sister would get more emotional, and she's become less emotional over it. But when I started dating her 10 years ago, her mom impacted her a lot, and she would get more emotional over it. But 10 years later, not as much. I've been pointing out things here and there too. Like I try not to get involved, but I'm like, some personalities, like her mom, my dad, you're not going to change them. So you just try to carve out a piece of a relationship to the best of your ability, a contained relationship, carve it out, enjoy what you can, and just know that they're not going to change at this point, so it is what it is, as they all like to say. And so with her mom, I don't get emotional over it, and she doesn't really get emotional over it either. But sometimes I'm the cooler head that prevails, and that doesn't even make sense. Anyways, 85,500. Let's get back to the watch party. 85,500. see if I have some time to troll some people today. Maybe not. Got a lot of work to do. What else? $85,250. Woo-wee. What's the bottom is in crew saying now? It's probably quiet. Oops. Oops. Hopefully I remember the mic's off. Turn the mic off. Enjoy the same background music. That would be much easier swing trade to the upside and downside, but I doubt we're going to get something like that. I think that's going to be about it. Ooh wee. Watch party, Bitcoin Wyckoff distribution. We looked at all the charts. We looked at the daily chart, the weekly chart, the 2-week chart, 3-week chart, monthly chart. We speculated hard. We went deep on it. We talked about it in advance. We're not the hindsight crew. We are the foresight crew. And we will continue to sniper the markets together every single day. I appreciate all of you. Oh, got a comment. I appreciate all of you. Thank you for smashing the like button. Thank you for it. Just they saw a monstrous bullish divergence on Inch Daily, well, there was sometimes there's bullish divergence. Um, Sometimes there's additional bullish divergence, meaning lower prices. And then sometimes the bullish divergence actually goes away too because it's so bearish. So that is why I always say if there's bullish divergence followed by a higher low, then let's go, right? Because that would be the higher probability. Bullish divergence by itself is not enough, in my opinion, for risk versus reward. I like to see bullish divergence plus a higher low. Sometimes I've just gone off of, depending on the lower time frame and stuff. Sometimes I've gone off just off the bullish divergence, but you better have a plan in place. And as you can see, we pointed out bullish divergence on algo. There was not a higher low, and then algo dropped out the bottom, right? So that's the caution is you had bullish divergence, then dropped. You had bullish divergence, right? I pointed that out. It had bullish divergence. And then now there's no longer bullish divergence because it took out RSI took out all those pivot points. So the higher low is the higher probability. And it got very close to being, so this one was very sneaky, right? Very sneaky. And had the bullish divergence, looked like a higher low, started to get back above, never made the higher high. So if you took that trade, just know that you better have a stop loss in place on that because it was starting to break out. So if you took that, okay, bullish divergence plus a higher low, that's a higher probability of a breakout. It did not. So when it closed back below, and then of course the last resort was closing back below over here, you know, taking out this pivot point, I mean, you should have been out, right? So even if you got in there, you might have been up 3%, closed back below, maybe you lost 3%, or maybe you lost 6%, right? Or whatever the stop loss was put in at, 3 to 6% loss when you're trying to get, or I think the risk, oh, that's right. The risk to reward ratio I had laid out it was a 9-to-1, right? So the 9-to-1, uh, I think I got out before the stop. Pretty sure I got out before the stop loss, and the stop loss was like 8 something percent, and I think I got out around the. I can't. Don't quote me on this. This is 5 days ago, and it wasn't a large position, and it was spot only, so it's not very. Whatever. It was probably like a 4 to 6% loss. I want to say maybe not even that much. It just started reversing back and everything started to reverse back. So instead of taking an 8% loss and a stop loss, I got out before that. But potential was to the upside after bullish divergence plus a higher low, never made a higher high. But if you're waiting for that, then you're kind of later to the party. Maybe there's already a buy signal. Maybe that would have been better anyways, confirming the lower high, right? But I was being very aggressive after watching it this whole entire way. Watching. Okay, bullish divergence. Let's see what happens. See if there's a higher low. Bullish divergence. Could be putting in a higher low. Take a swing, right? Took a swing. Get out early, or cut your losses. Keep them smaller, as they say, and then on to the next. So that's my thoughts on Inch. You got it. That's my thoughts. That's a real case scenario where bullish divergence looks like a possible higher low. Did not even close back above the trading dots, closed back below it. And that was like signaling me like it doesn't look ready. And then might as well just get out. So, but yeah, let's see. I think we're gonna call it here. Maybe we'll do another watch party tomorrow, or we'll just do the charts tomorrow. I'm not sure. We'll just see what the markets are doing. See what the markets give on Taco Tuesday. But with that, hope you have a good rest of your day. Thanks for watching. Thanks for hanging out. Hopefully I answered all your questions. Had a couple chart requests, or one chart request, two chart requests kind of. And we'll continue to snap the markets together. With that, we will see you on the next one.